Have you noticed the recent surge in Bitcoin's price? Are you curious about what's causing this sudden ascent? You're not alone. Bitcoin, often referred to as the digital gold of the 21st century, has been dominating the headlines with its price escalating to nearly record-breaking levels. But what is the catalyst for this? Various factors are at play here. One being the escalating adoption of Bitcoin by institutions, as more businesses and financial establishments acknowledging its worth as a digital asset. Next, we have global uncertainty with recessions looming. In periods of financial instability, many are resorting to Bitcoin as a secure asset in the realm of cryptocurrency. And let's not overlook the timing of Bitcoin's halving event, a pre-scheduled decrease in the rewards miners receive, which historically leads to a price uptick. But it's not solely about Bitcoin. The rest of the crypto market is also reacting in captivating ways. So could this potentially signify for the future of Bitcoin and other digital currencies? Stay with us as we decode the causes behind this price surge. First off, let's talk about institutional adoption. This factor is crucial when it comes to Bitcoin's recent price surge. You see, institutional investors are no longer watching from the sidelines. They're diving headfirst into the world of cryptocurrencies, with Bitcoin leading the pack. Renowned financial and tech firms from Wall Street to Silicon Valley are now investing heavily into this digital gold. Why, you may ask? Well, these institutions see Bitcoin as a valuable asset, a hedge against inflation, and a means to diversify their portfolios. This shift in perception has led to a surge in demand, and with Bitcoin's finite supply, the price naturally follows suit. But it's not just about the money. This adoption signifies a change in the financial landscape. It represents a shift towards acceptance and legitimization of cryptocurrencies in the mainstream financial world. So the power of institutional money is one key driver behind Bitcoin's price surge. Now, on to the next factor, global economic uncertainty. In a world where economic landscapes can shift overnight, there's a growing desire for a monetary system that's not tied to any single government or economy. This is where Bitcoin enters the picture. Considered by many as digital gold, Bitcoin is increasingly seen as a safe haven asset. Think of it as a financial lifeboat offering a degree of security amid economic turmoil. When traditional markets fluctuate or when currencies depreciate, investors often turn to Bitcoin. It's like an insurance policy against economic instability. In the current climate of global economic uncertainty, more and more investors are looking for such safety nets. This increased demand, coupled with Bitcoin's limited supply, naturally leads to a rise in its price. Thus, global economic uncertainty is another significant factor contributing to Bitcoin's recent price surge. Another noteworthy factor is the timing of Bitcoin's halving event. To grasp its significance, let's delve into what a halving event is. It's a pre-programmed feature in the Bitcoin network that halves the reward miners receive for adding new transactions to the blockchain, and it occurs roughly every 4 years. The most recent event happened in the year 2020. Now, why does this matter? Well, halving events essentially reduce the rate at which new Bitcoins are created, tightening the supply. This scarcity can drive up the price, especially when demand is high. The timing of the recent halving coincided with a surge in institutional adoption and a period of global economic uncertainty, both of which increased demand for Bitcoin. So, the halving event isn't just a technicality in Bitcoin's code. It's a fundamental economic lever that, when combined with external factors, can significantly impact Bitcoin's value. The halving event therefore plays a crucial role in Bitcoin's price dynamics. Lastly, let's look at how the rest of the market is responding, particularly altcoins. As Bitcoin continues its upward trajectory, altcoins are not being left in the dust. Many are following in Bitcoin's footsteps, experiencing significant growth. This is not surprising, as altcoins have historically shown a tendency to follow Bitcoin's price action. However, not all altcoins are moving in sync with Bitcoin. Some have charted their own course, moving independently of Bitcoin's performance. These outliers remind us that, although Bitcoin is a dominant player, it's not the only game in town. To put it all into perspective, Bitcoin's recent price surge is a complex phenomenon influenced by a range of factors. These include institutional adoption, which is driving demand, global economic uncertainty, making Bitcoin an attractive hedge, the timing of the halving event, creating scarcity, and the response of altcoins, adding to the market reaction. Stay tuned for more guides and finance wisdom. Until next time, keep an eye on the market and stay informed.